Okay, Buddy, the MNOs have an inestimable advantage, don't they? Because they do effectively own everything that's in your telephone. They can judge what sort of person you are, how late you stay up at night, how early you get up in the morning. That's got to feed into creditworthiness, surely. What kind of calls you make, how long you talk to people, do you make business calls, family calls, etc., etc., etc. And they can see everything on your telephone. That's a massive advantage, isn't it?
Absolutely. I think it's an advantage to the customer.
To the customer?
Yeah, to the user. If you allow that branch or the telco to have access to this data to evaluate your habits, which you often don't have any way to understand how those habits are generated. For example, you may be a price-sensitive customer but not know that you're that price-sensitive segment. So if you give them access to this information, in exchange for that, you have access to something which up until that point was entirely
But it isn't a question of giving them access, is it? They have access automatically because they provide you with the service.
Yeah, that is the agreement that you have. When you sign up to a digital credit product.
If I sign up to branch, I have to ask.
No, but I meant the mobile telephone operators.
They don't. They have certain sets of that data. They have when you turn on your phone and potentially where you physically are, they can find. But they don't have your contacts and your Facebook
no, if you are applying for a digital credit product,
then you
give them access to that information. Yeah. You are right that that data doesn't belong to them in a de facto basis. But if you give them that data, then you have something in return. And my personal sense is that given how difficult it is for the average person to get access to credit, that is a deduction, is an exchange which they think is a fair one. It may be a decision which is based on a lack of knowledge of the worth, the value of your data and the need for data privacy, but that's a separate issue on customer protection.
That's the Google argument.
Yeah, that's the customer protection aspect. But in their calculus, that is something which is worthwhile.
Okay. Maxwell, you regulate this activity, at least in this country. Where do you see the challenges in creating, I mean, maybe you don't see it's part of your job to create a level playing field among the different players, but do you see it as your role in any sense to kind of referee things like who can extend credit, who can take deposits, who can own data? Just give us a sort of snapshot of digital financial service regulation as you see it in Ghana today, and if there are potential or actual conflicts between the players.
Thank you very much. I think in Ghana, when we started this in 2007, we actually rolled out the branchless banking product, which we were very determined to make it a bank-based product. And so by coming on board the telcos, we emphasized the need for any mobile money or e-payment transactions to be bank-based. So in Ghana, for a telco or a fintech to be able to engage in e-payments or mobile money transaction, you have to partner with a bank. So the telcos themselves will have to set up a non-bank financial institution, something like MTN or Vodafone, any other telco, cannot operate as just MTN or Vodafone. They have to set up a financial institution, a non-bank financial institution, to be able to operate that as a bank base. What we are doing though now is that we are putting forth to Parliament a new Payment Systems and Services Act, which creates the room and the platform for what Andy called the disruptors to be able to come into the fintechs, actually, to come into the space, to have freedom of innovation, but there must be regulation.
Because the regime you originally described has been suggested as being one of the reasons why digital financial services were slower to grow in Ghana than in other markets.
Exactly. That's why we move in with this new act, which opens it up to introduce some form of responsible innovation, some regulation to allow the fintechs to be able to move into the process and to be able to expand what has been happening so far.
Okay.
Can I just add?
Yes, please.
I recently had a child, so you'll allow me this slight strange analogy. But I see the DFS space, particularly as it relates to regulation of DFS players, as a mother and a child. The mother, of course, being the supervising authority, which is the Bank of Ghana. And the newborn, which is, 10 years ago in Ghana, we had DFS players, propping up onto the market. And if you're a newborn, there's an older sibling who is the banks, who suddenly they see a younger person they're competing for space and attention with the mother, and it's with the younger child, and it's the role of the mother to make sure that everybody feels equally loved. And in addition to which, as the child grows,
Recognizing yourself in this. Oh, Mum.
Yes.
and as the child grows, human beings come pre-programmed with some default settings, but we do have a lot of learning to do, and so we should be allowed as children to grow, to learn, to make mistakes, to
So
experiment.
the new regulation is like letting your child go to the shops on
Yeah,
his or her own.
absolutely.
for
And
the
it's
first time.
important to let that child experiment and see, because you don't know what that personality of that child will be. You need to let them discover it. But when they get too close to the fire, you have to pull them back. There's all sorts of that back and forth. And 10 years in now, you have a 10-year-old who is the personality is more formed. The rules are sort of set, more or less. The mother has a sense of the child. The child knows the sense of the parent. They've passed that toddler stage where they're trying to push the boundaries and figure out what they can get away with.
I'm just waiting till this child is 18 and
Exactly.
gets
But
his
it-
girlfriend pregnant,
No,
coach yard,
that doesn't
crashes
happen
his
enough.
father's car. All of which things could happen.
No, but I think let me just make a point here. I think the fintechs strive on innovation and creativity. And I think what the new act is going to do is to give them the room to be creative and innovative. Without innovation, we will not be able to move to the next point. And that's what the new environment is going to create. But we have to also do that, bearing in mind that as a central bank, we have financial stability
Yes.
and
Just to
to
play devil's
prevent
advocate
financial
for me,
risk.
by the very nature, and your parental analogy works here as well, by the very nature of the regime with which you began, you felt that allowing non-bank entities to be deposit-taking and credit-extending institutions was risky. And I think we can say it is risky. Obviously, you then have to say, we allow it, but we control it. But you are clearly allowing more risk. I don't think you would disagree. But with the trade-off being greater financial inclusion, more financial services. Is that how you would draw up the formula?
We're actually allowing more players to come into the system because we're still going to allow this to continue to be bank-based. So you have to partner either a bank or an SDI to be able to roll these services out because we have supervisory responsibility over the banks and the SDI, and that gives us the room to be able to implement a risk-based supervision program. And by that, we'll be able to bring the fintechs on board. What we're going to do, though, is the requirements for fintechs to be licensed will have to be rolled out in such a way that it does not stop creativity and it does not stop innovation. And the prudential requirements that will be put in place will rather encourage them to collaborate more with the banks and the SDIs than to rather stifle their growth.
Okay, so are we seeing, I mean, you obviously all look at different markets. You see, Andy, let me ask you this question. There is a kind of traditional idea that you have these innovative, disruptive startups, you use the term disruption, digital disruptors, taking on the incumbents, the sort of brave, plucky little startup, the 25-year-old smart kids with a bit of money behind them, taking on Standard Chartered. So there's a sort of romance to that, and there is a romance to being in digital disruption, right? I mean, that's why young people want to go into it. They're idealistic and romantic. But is there a shift away from that model towards partnership, towards co-opting, towards, in the end, the big incumbents buying, co-opting,
I know you directed the question to Andy, but could I
Well, you can both
comment
answer.
on that?
Yeah.
If you'd like to
From
answer first, go
from
ahead.
the East Africa experience, the people who have succeeded are all actually the large players. They were the large players at the beginning. They didn't buy, Safaricom didn't buy a startup and create M-Pesa. They created it. Equity Bank has always been a huge leader and is now a massive digital bank with millions of, they didn't buy anybody. They innovated, and they're the ones who deliver customers by the million. M-Shwari was the digital lender, the first real instant digital lender. It was an existing bank.
So is the
I think the
romantic
whole,
myth a bit of a
yeah,
myth?
it's a myth.
But I would
Oh
also-
dear. We have to back up and go home.
I think I need to add something. I think the context of like disruption has this, for and against narrative. I think it doesn't necessarily have to be the case. I think for disruption to happen, there's a hunger already in the market, and that's why it kind of gained fire and kind of demanded that things kind of change. And change is not necessarily bad, even though in some instances disruption has led to cannibalization of certain industries. I don't think it's particularly the case in the financial services. I think that the relevance of the banks are still there. Maybe not as prominent as before. Maybe they would be a bit of a morphing type of scenario. But I think there is a world where the market is large enough for all players, where people actually collaborate to meet the customers yearn, because disruption in itself is the fact that customers are saying, we want this, we've wanted this for a long time, and now this is here. And then there's that rapid adoption. So I think there is a world where the banks, with their influence and their knowledge, and we can't discount that, collaborate with fintechs and their fresh new thinking and the need for disrupting how we see things to collaborate and actually offer solutions that works for everybody. So yes, I just wanted to add that.
Yeah,
But I think let me rather
The
let me
voice
add
of youth.
let me add this one. I think I want to add an adjective to the word disruption, and I want to call it creative disruption. Creative disruptions in the sense that this new innovation is changing the mode with which we deliver financial services. And once we see that as creative disruption, it creates a platform for collaboration. And in Ghana, that's what we're seeing now. We see that as the customers are demanding this new, fastest, most efficient way of receiving financial services, of reaching out to the unbanked segment of the population, and especially delivering credit to people who will not get credit from the financial service. And smaller credits, as low as $10 equivalent in the morning, they pick it up in the morning, use it for trading. By evening, they are paying it back. And that has been made possible as a result of this creative disruption. And for me, that creates room and synergies for collaboration rather than pushing away the incumbent.
Okay, well, we'll let Andy answer the question in a minute. Let's go to a different question, though, because
that's fine.
Maxwell talks about lending and micro-lending, and that's what Maria does.
That's fine.
Is credit necessarily a part of a digital financial ecosystem?
Absolutely,
Because it all begins with payments, doesn't it? Payments is where the whole conversation began.
Yes,
So-
yes. I mean, I think it's also the ease with which you are able to access, that credit using your, if you like, your digital capital. Because the whole thing about digitization is also premised on being able to readily identify who you are transacting with. And without putting in place the pillars that would ensure that all people who are also participating in the digital space can be readily identified, then it makes the whole system of credit a bit more challenging. And so in all this scenario that is playing out, one of the key areas that I want to believe that the government and regulators will really be looking to, especially in Ghana here, is the initiative by government to roll out what is known as the national ID system.
Well, the Vice President spoke at some length about
Precisely.
this morning.
Precisely, but it's taken a bit of time to come to the market. I know probably they are still trying to make sure that they have it very right, but when it does come out, I think it will be a massive game changer because through that, you can be sure of who you are dealing with and where you might probably be able to locate that person together with all the other initiatives that the government is playing out. But I would also probably also want to say that the kind of relationship that plays out, amongst these market players depends on their perspective of risk, whether they are less or more risk averse. You will find out that the fintechs that are being, for example, provided for in the new payment systems bill that is going to Parliament, ought to have the space to be able to experiment and create, in such a way that their hands are not tied behind them. I mean, the traditional players in the ecosystem are already established players, and whereas they might take some risk in order to innovate, it's not the same as a young, hungry chap who just comes out with a fine idea, gets access to some programming capacity, and immediately gets certain things to happen. In a very, very, if you like, non-judgmental way. Understand? And that's what will make the system work.
Although what's interesting is this digital identity program, all the aspects of that. All this stuff began with phone companies because phone companies know who you are by definition, know where you are, know what your name is, know what your phone number is, certainly. So that's almost that was a proxy for government organized and administered digital identity. When government organized digital identities exist and are rolled out, others will have access to that. Whereas when it's the phone company, only the phone company's own commercial proprietary information. So it seems to me that the scenario you're talking about opens this up and maybe takes some of the dominance of the MNOs out of the industry. Do you agree? Does that make sense?
I mean, I'm not sure I even agree with the premise that we all need to be so uniquely identified. So I know that it's important for credit to be able to say you're the same person as that other one who also applied for credit. But I'm not sure the rest of the financial sector really needs that. And you talked about the phone number. And if we have some unique identifier that is enough for me to authorize use of my account, I'm not sure why everyone else needs to know that it's really me. And if I give you my ATM card and give you the PIN, I don't know why you shouldn't be able to withdraw from my account with the information that I've given you. So I think it's important for credit, but I think that Ghana is a good example. You don't already have the digital ID, and yet you have this booming mobile money industry that's very successful.
Well, I think it's more important in markets where you have a large volume or value of interactions between government and the population. For example, in India, where they had billions of dollars, or is it billions? Hundreds of millions going from the government to individuals, social protection transfers. In Ghana, too, we have the LEAP program. So in that case, it's entirely important. But I agree that it doesn't necessarily have to be an ID as long as it's an acceptable form of a unique identifier.
No, I would take a different view. I think that there is a need for us to have a unique ID, and it exists in Ghana. It exists in multiple pockets. Yeah. So the fact that we don't have a national ID doesn't that the unique ID system does not. It does. When you go to the mobile phone companies, they are using a voter's ID card that you cannot really check whether it is valid or not. You go to Social Security, they have their own biometric ID. In fact, until recently, the banks were going to introduce our own BVN, and then you go to other institutions, they have their own ID. What the national ID is doing, though, is that it's trying to bring all of this together, making it biometric, making it easy to link to all services, and making it easy for services to be delivered to unique people. Let me give you an example of India. A couple of years ago, they introduced the biometric ID. Through that, they were able to bring 300 million people into the formal sector for government policies to reach out to these people. And that is the objective of all this financial inclusion. The financial inclusion is not just about financial services to the unbanked segment, but going beyond that to ask ourselves, what do we want to see after they have access to financial services? Is it about jobs? Is it about inclusive growth? Is it about poverty reduction? That has to come. And it has to
Formalization.
exactly. Formalization of
and
the
the
informal
ability to
sector.
tax. I mean, the
Exactly.
Vice President said
Yeah.
governments want the ability to tax.
Exactly.
So, you know, it's not a
I didn't
one-way
want
That's
to
a
street.
say
very
that.
sore topic.
It's not a one-way street.
Yes.
I'll add something from the credit perspective. I think being able to digitally identify someone is absolutely critical for credit. And you also say two-pronged, one in the practicality in itself, because before we lend to you, we need to know who you are. And then secondly, in the regulation. If you look at the financial regulations, very heavily skewed towards KYC being a requirement to do anything. So at the very least, you need to know your customer's name, basic information if we were to trace in the event of anything, we needed to do an audit. And I would also add to that that in Nigeria, one of the things that spurred the growth of the credit market was the fact that we had the BVN, like you mentioned. So it made it easy to identify people. It made it easy to know who they were. So we could say we gave this person money, this person repaid. It also helped us able to kind of comply with the regulations that guided our operations in Nigeria. So I think that is definitely one key piece. And when His Excellency spoke about it early this morning, I was like, okay, this is in the right direction. That coupled with having strong payment systems and APIs that you can kind of plug
addresses.
through.
And addresses. Simply
Yeah.
having an identifiable address so you can take part in e-commerce and the debt collectors know where to find you when they don't pay you back your
Yeah,
stuff.
don't you worry that state surveillance is getting out of hand? If you have my biometrics, you have my physical
worried?
address.
I-
You're championing the address part of it.
No. Look, you misunderstand my position.
Aren't you worried?
Well, I mean, I think
You,
this
you
is...
diametrically
Yeah.
misunderstand my position.
Okay.
I am a libertarian anarchist. I don't give my name or number to anybody. And if the United Kingdom introduces a national identity card system, which we don't have, I will go to prison before I carry one.
That is a luxury which you have, Christopher.
Just so that you
Others
just
may-
don't misrepresent me again. I
Yeah.
just thought I'd clarify.
I think
that.
this goes
But
back
this
to
isn't
the-
about me. So the point is that the Ghanaian government wants these addresses, unique identifiers, unique identity cards, digital identities, so it can tax, so it can pay, so people can lend, so people can be in the formal economy, so people can take part in financial services. And it's exactly like you were saying earlier on, buddy, it's just a trade-off.
Yeah,
Most of that stuff seems to me, Joe Citizen, as a benefit, therefore I submit to it.
yeah.
But you don't understand it.
Sorry?
As the citizen, you give out, and this has played itself out all over the world. It's not obviously only in Ghana, but we give out all our data to branch and whoever else, and we have no idea
Yes.
what happens after that or
That's
what
a,
could
that's a
happen.
third order concern.
But you and I are on the
think.
same
not
page
a-
on this, though.
I'm not sure about
Terrifying
that.
to you though that may seem.
Let me say something about the whole data thing before maybe we move on. I think you're right, like it's a concern, the fact that, now people are collecting a lot of data, we don't know what Google takes from our phone, But I think there are two important things that needs to happen. One, the customer education. They need to know what they're giving out. And then two, the transparency from the companies to tell them what they're taking, what they're using it for, the limits of the use. And also the power back to the customer to be able to take back the decision
Oh,
of
Maria,
the...
nobody reads that stuff.
I know.
You click
And that is why
on
we
that
have...
1,000 times a day.
No, I hear you. And that
They
is why
don't-
we
yeah.
have...
Not even in the West do they read that
Yeah.
stuff.
And that
Because
is why-
they've decided that for the benefit which they have measured without really knowing what they're giving away, they've just measured the benefit. And we're talking about a population here which are often, even if they were able to read all the terms and conditions and understand them, are in a situation where this is not
That
an
is-
option that they can
But
afford.
those
because
that is a
definitions
good
have been-
and which-
DFS is not talking about the banked, the people who are in bank accounts, really. In Ghana, the increase in financial inclusion has come primarily from people who, are unable to read the terms and conditions. The amount of growth in access to bank accounts has been in single digits, whereas 2/3 of the increase of financial inclusion has come from mobile money. People who find it more difficult to have access to the things that other people who are banked, who can afford to give up, who can afford to contemplate privacy or all those things, don't have access to.
That is a very valid point, which comes to the third part, the power. essentially, as a user, you should have the right to take back that information. I want my information deleted. We were not in a utopian world where everything, balances out evenly, but everyone needs to be aware, one, the customer, of the responsibility of just understanding, and then on the company side, making the language plain and simple and giving back the customer the power when they do need it. So I think...
But the attorney in Cupertino is going to make damn sure that language isn't plain and simple. So
Oh no, there are companies like Branch that make it very plain and simple.
Yeah.
let's just consult the audience for a moment. Is there anybody in this audience, there's, I don't know, about 100 of you here, maybe slightly less, who is worried about the amount of data about himself or herself that is in other people's hands without your knowledge?
Everybody.
Okay? Reasonable sprinkling of people. Okay. That's as many as half. Yeah. Okay.
Surprised it's not more, but look at our demographic.
Well-
that goes back
Yeah.
to my point. All of us have the option to get
Yeah.
alternate
well,
collateral.
unfortunately, the great sort of freedom disruptive exercise of fintech and cyber, what do you call them, Bitcoins and all that
But
rubbish,
Christopher,
is all meant to be kind of hippie anarchists living in a colony thinking it's great, the internet's free. But in fact, it's the biggest exercise in totalitarianism ever visited on the human race. Potentially.
Yeah, that's like
Now,
a whole different...
does anybody in this audience want to ask a question of these panelists before we get out of
Martin
here?
wanted to comment.
I think Deputy Governor had a... No?
Yeah.
There's a question at the back there.
Christopher.
Give that guy a microphone, and a question just here in the middle, and a third one there. We'll take those three for the minute. Please, go ahead, sir. Make it quick, snappy, and a question.
Okay, so we're all talking about digitalization, and this is wonderful. We want to reduce the amount of cash in the system. But I just want to say that there's something which we need to watch, and I want to find out if there's anything the Deputy Governor can help do. So you go to the mall, you want to buy something in those big shops, and they tell you the price on the label is, say, 100 cedis. You finish picking the item, you get to the counter, you want to pay with your debit card or credit card, and they tell you, if it's with a card, it's 3% more. You drop the item, then you walk to the ATM, withdraw cash, and you come and pay 100 cedis. I don't think this is the way we need to go. So there are certain POSs or certain places you go, you want to buy an item, and they tell you because you are paying with a card.
Is
you
your
need to pay
question,
more.
is that just and proper? Is that what your question is?
Yeah, so what
Okay.
can we do more?
Well, it's not just
yeah,
and proper. Obviously.
I think that's the challenge we face with even rolling out the e-switch program, where the POS, the cost of using the POS made it prohibitive for that to penetrate. But I think where we're moving to now, where the incumbent issue comes in, where we talk about Visa, MasterCard, they are all beginning to realize that for them to be part of this game, we need to introduce something that is very cheap to reduce the cost of transaction. And so we are moving to the era of using QR codes, which makes it very easy for you in order to prevent or to minimize cash outs, to make it very easy for you to use your phone, to use the QR code to make transactions. And that is being planned, and that's, I think MTN has already started piloting it, and that's something that we are collaborating with the service providers to make sure that that catches up to reduce the cost
this
of...
surcharge for using an electronic payment method is obviously, I would imagine, it's just a blip in the road. That's not going to persist.
Exactly.
Well, I mean, it's absorbed
You
by
can't-
the merchant in most cases. Outside of Ghana, or if you go to big hotels, if you pay with your card, they are absorbing that 3 or 4%.
I mean,
because
in a sense,
they
that's
want-
more transparent than the reverse, which is what happens almost everywhere else, which is that everybody gets charged 3% whether they pay with cash or not. So that's the other way of looking at the same question. We had the second question, I think, was here in the middle. Yeah. Can't quite hear you. Just say it again. Does the panel think cryptocurrencies are what?
have a role to play in
Oh,
the...
have a role to play. Who wants to go first? Central bank. I'm sure you and the governor compare notes on your
Yeah.
Bitcoin holdings most mornings over coffee.
So let me look at it this way. The central bank is very much in support of the use of blockchain technology to help with our payment systems and also to help to make the payment system more efficient. We're looking at different aspects of the blockchain technology, which our team is looking at. In terms of cryptocurrency, Bitcoin, as we have already issued a statement, we're saying that this is an area that we are trying to understand ourselves. We will be able to regulate it better if we understand ourselves, and we are trying to understand, similar to how other central banks around the globe are trying to understand. Some have made decisions to license some exchanges and quickly reverted. And so we want to take our time to understand it better to be able to then say that we'll be able to regulate that aspect of a payment system or not.
Anybody have a strong view
Yeah,
on crypto?
I might just add that the DFS is not a preserve of the central bank per se, because however it may be, it is evolving, and if you know the history of cryptocurrencies, they actually have come out of the concept of non-regulation, if you like. And so to the extent that those involved in that are able to appeal to the consumer or the user who believes it's more convenient to go on that channel, I believe it will thrive. And so for
What
me,
kind of consumer would think that?
Criminals, drug
Men's gold
dealers,
kind.
those kind of
Took the
people.
words right out of my mouth.
So in fact, it goes, your question is at the heart of the issue, which is to say, at the end of this whole value chain is the consumer and what he or she wants. And consumers are very, very complex and dynamic and varied in what so they should have a choice.
I appreciate your consumer and customer-centric kind of general position, but you have to go back and acknowledge the old remark about if Henry Ford had asked the consumer what he wanted, he'd have said he wanted a faster horse. He wouldn't have said he wanted a Model T. So the consumer may be king, but is not necessarily demanding things that he doesn't know exist yet.
That's the point.
I mean-
That's the point. So it depends on the maturity of the market and the players in the market as well. So for me, it goes with the saying that it used to be the survival of the fittest. In my view now, it is more or less the survival of the most digital, the one who is able to anticipate that unique need of any particular consumer and appeal to that need.
Fit the
But
sequel
Christopher,
digital.
let me quickly say something to that. Yes, the consumer is the last person in the chain. The consumer, this is what he wants. But we live in an era where the central bank is the only institution that has the mandate to determine what is a medium of exchange. And so as long as cryptocurrency or a Bitcoin is going to be used as a medium of exchange, they must be regulated. And it must be regulated by the central bank.
Absolutely. Although Sweden is now allowing people to pay taxes in cryptocurrency, but I don't think in the end any national government is going to allow cryptocurrency to become a free medium of exchange in its jurisdiction. Do you want to stick up?
There's a leapfrogging effect in Africa. Let's think about that. DFS, mobile money, is quite a leapfrogging technology. So I wouldn't rule it out on that basis. But I would also say that it seems to me something, given its level of complexity, given the huge proliferation of the very different cryptocurrencies and a very difficult way to credibly discern which one is better than the next. People know Bitcoin, but what about Cryptcoin and Vitcoin and there are so many. So all of those reasons I think will lead people to remain
And they're all
cautious.
volatile.
Yes.
But your answer to this chap's question is yes. There is a place.
I think his question was, does cryptocurrency have a role?
Is there a role, yeah.
in DFS? Yes, I think
And you
it
think
has a small role for those people who have that risk appetite, and there will
Exactly.
always be people with that
Exactly.
risk appetite.
Yes.
Okay. Very good. Cryptocurrencies are not really money, only in the same way that air miles are money. You can
But
use
they're
them for
valuable.
air miles are valuable.
Yeah.
The difference is that
Cryptocurrency is also
you can't
valuable.
finance terrorism
You're
with air
paying
miles.
taxes in Sweden with cryptocurrency.
Yeah, but the Swedes are a bit balmy, aren't they? We all know that. Have we got any Swedes in the house? The third question, I think, was over there somewhere.
I think my question is more on the risk of giving access of data, private data, to either the government or a company. I had Vodafone saying they are trusted, and whether we have mechanisms in terms of legal to sort of protect the consumers in terms of data privacy and so on. Because we may be building a financial ecosystem based on the information, but then there is no legal backing to support the system.
Ghana has a data privacy law.
Yes.
Yeah, we have a Data Protection Commission with a Data Protection Law 2012. I'm a member of the board of the Data Protection Commission. That has been rolled out. There is an education campaign that is going out. In fact, we've reached out to a lot of service providers and stakeholders to make it part of a licensing and renewal requirements to make sure that these data protection guidelines and the principles are adhered to, and you have to renew that every year on a yearly basis. So that goes hand in hand with that. And also next month on the 22nd of October, Bank of Ghana is launching the new cybersecurity guidelines for all financial service sector providers. And that has very clear requirements for service providers to make sure that their cyber security regulations are in line with what the regulator has put out.
Do I understand from your question that you have a concern about the safety and privacy of your own information? Amolo, in markets that you look at, I mean, obviously the firm looks at markets all over the world, right? So where do you see best practice in this? So perhaps it's hard to judge, but
In which aspect?
in data protection, in the protection of personal data that is, for whatever reason, freely or inadvertently given in return for some service.
Well, I think the Indians, and they've talked about the Indian, the National Digital ID system, they have the concept of the digital locker. So you put all your data in a government-run service, but nobody can access any part of it unless with your permission.
Apart from the government.
No, including the government. I mean, according to how it's supposed to work, nobody can access unless with your permission, and only then for a specific purpose, they can consult, but they can't hold your data. So if I were to apply to Branch for a loan, I would permit Branch to consult all of the relevant or necessary data, but they couldn't store it. They couldn't sell it. They couldn't pass it on to anybody else. So I think that's the problem is people understanding it, I think.
Yeah.
But in terms of principles about data management, I think that's a very good system.
And people do care about it, but not as many people as you would think.
Maybe a follow-up on that question.
Yeah.
Which government can we trust to have our data? They can force you to give the data.
Who are you asking that question?
Anybody.
Which governments do you trust
Which government do you trust?
with your data?
With my data? No government. I mean, they have access to my data. I cannot, I think it's, there are
Wouldn't trust your
the
partner
means
sitting here.
sometimes justify the ends. So for example, in America, where you might be able to say that it had probably had some very well developed and designed data privacy laws, and then 9/11 came about, and then that put all of that on its head. Your ability, your interest in protecting your data was subsumed by the interest of protecting the state. So I think the state will always protect.
I think they would say
mass
protecting the
number.
public rather than the state.
And the other
No, I
question
use the
is,
state. on
Well,
public.
that's fine, but I said I think they would say.
Oh, they would say yes.
But who would you trust if you don't trust the government? Because you have the
No, but I mean,
option.
the issue
I'm going to
is-
trust Facebook, I'm going to trust Google, I'm going to trust
Yeah.
Branch, and none of them,
Yeah,
I didn't
you don't
elect
trust
them.
your
I
spouse,
didn't-
but you still,
Yeah,
I
and
think
they're
there's
all-
They're
something
all in
to
it for
add.
the money, right?
With the fact
Yeah, exactly, and I don't know what they're up to.
There is the fact that this is the reality we live in. We live in a digital world, which means data gets transmitted in seconds, at rapid levels. It's our reality. I think it's two-pronged. I think there needs to be a lot of customer education, because living in a digital world, wherever you go, it's not even about just government. Like globally, you log into Wi-Fi at airports. It's not no one person is this, because that's the business model. So it's the consequence of the new reality that we live in, and we kind of need to empower ourselves to be able to operate in that reality. So on the user front, I'd say customer education. You see an app or whatever that's obscure about how your data is being used, that isn't clear about how it's used, doesn't give you the right to take your power back, you want to be skeptical. And then on the regulatory bit, just guiding the companies, making sure that they do adhere to certain rules on user, customer data usage, but then also remembering that we live in a digital world and that the business model is skewed in such a way that this data allows you to give value. So yes, I would say it's two-pronged, and I would say it's the reality we live in, and the customers should be educated, and then the regulators should also guide.
To escape this, you need to go and live in a tree.
Exactly. You would literally not use your phone and just not relate with anyone.
Right, well, who knew that this was going to take... I've been saying all along this is a very political topic. Would anybody in the audience like to ask a question? I think there was another hand up I saw earlier on. No? Okay, well, in that case, we'll just have a little... the gentleman there in the stripy tie.
I want to find out, this goes to the central bank, when will there be a legislation on the amount of money somebody can take over the counter in the bank? Because
the amount of money someone
amount of money you can deposit?
No,
take
withdraw.
Over the counter.
A withdrawal?
Over the counter, because yes, we keep saying, trying to go cash light, but there are instances where people walk into the banking hall and they want to withdraw.
There are restrictions already.
$1 million Ghana cedi, $1 million cash over the counter, and there's no restriction. If the man has it in his account, you have to give to him.
There are restrictions in many places. What's the restriction here?
There are restrictions here. I think there's a question of enforcement, right? So there are restrictions here. There are restrictions as to how much amount of money you can take out from your personal account.
What is the nominal amount?
And then there is also a restriction on what you can take out of the third party's account. So assuming if you are carrying a check given to you by someone to go and cash, there is a restriction on how much you can take out. There's a restriction on how much but the question really is the enforcement. And that is started, and there's this is being enforced. So we can separate the regulation away from the enforcement.
Okay, because I know of the third party, but I don't know of the individual, because individuals walk into a banking hall. If they have $500,000 in their account, they want to withdraw it, you have to make the cash available to the person. That's something that I know.
I can't hear the question.
There's a hand at the back there.
Yeah, there's another question at the back.
Oh, right. Okay.
So I think he said that when you go to the bank, you have to make the cash available because there's no restrictions. I guess that's frustrating for him.
There's a lady with a hand at the back.
Sorry, yes, there's a lady with her hand up at the back. Let's put a microphone in her hand.
Thank you very much. I'm just responding to the last question. The thing is, we need to be careful about restrictions. First of all, we need to develop the digital means of payments and also institutions that will receive payments by digital means. When this is done, I believe that the central bank will not even need to apply any restrictions. It will take care of itself as a matter of course. So the important thing to do is rather for us to develop the digital payment ecosystem, and then if and when the central bank thinks they will, put in restrictions, at least you know that people have the means to make payments. But you can't say, don't take so much money just for the, fun of it. Thank you.
So if I may just add, I believe, admittedly, for local currency, like Madam Ellie is saying, she herself is former central bank, there has to be some, sensitivity about placing restrictions. But for Forex, clearly, there has to be some restriction, naturally, because of its impacts on a number of other fiscal measures. So with local currency, I don't really see the issue of restriction playing out that much. But with Forex, I believe it's already in place effectively.
But there is a restriction already.
Yeah.
On local currency.
Local currency, I'm not sure about.
Well, there is.
Unless it's a third party.
For local currency, for a third party transaction, there is a restriction.
Yeah.
But for individual accounts, at the moment, you'll be able to take any amount you want
So
to take
I
out.
can
of
take
it.
out $1 million worth of CDs.
But
CDs.
CDs. Dollars, there are restrictions. Foreign exchange transactions, there is I think you can carry up to 10,000 US dollars. Beyond that, you need to use the banking system and you need to support it with documentation as to what you're going to use it for. But for local currency, from your own account, with your own check,
Standard, yeah.
as at now, there isn't any amount restriction as to how much you can carry. But as and when we continue to develop the payment system where we'll be able to use the GIS system and the ACK system where you can use electronic transactions to send money out for it to be received, then you'll be able to then start placing restriction. Then we'll be able to move towards a cash-light society that we have set as a target to be able to move to.
Okay, 1 minute or less for each of the panelists. Let's say that our friends from the Bank of Ghana would like us to come back a year from now. We hope you will. And discuss this topic further and how it's developed. A year from now, what's number one on your wish list for improving this ecosystem? It's a word you like very much, Andy, so we'll start with you. What is your number one wish to improve the digital financial ecosystem in Ghana? Let's restrict it to Ghana.
I believe, putting myself in the shoes of any average user or participant, what you really want is a convenient means of transacting, but also in a secured manner. And I would always want to place security above comfort.
So greater security.
Greater security
confidence
is very, very important because
in security.
wherever the digital financial system has evolved, we are also aware that there are challenges. And so we should continue to move to strengthen and tighten the controls that will make it difficult for unscrupulous people to also participate.
Okay, Maria?
I think it would be more on smart regulation. With disruption, it changes the context with which you have to think about things. And I think it's important that for that to happen, there needs to be collaboration within the parties because it's an ecosystem. Whatever affects one is likely to cause a ripple effect to affect the entire ecosystem.
Okay.
So it would be a more inclusive, collaborative approach towards smart regulation, towards thinking holistically about just not the current impact of the laws that are put in place, but then the future impact and the impact on the customers that you by the fact of your regulation are trying to protect, so you don't overprotect and stifle.
Okay, so for the final three answers, I'm afraid I'm going to add a restriction. You're not allowed to use an abstract noun.
I'm not sure what an abstract noun is.
Well, collaboration is one, security
Okay.
is one. I want one practical, doable, measurable thing that we could say a year from now has happened or has not happened. Okay, so I'll give you a few more minutes. Buddy.
So Ghana is in the process of finalizing a national financial inclusion strategy, which as a subset of that has a digital financial services policy, which is essentially outlining how DFS will help to drive this national financial inclusion strategy. My hope is that a year from now, both of those policy documents are passed and are being implemented. And one of the impacts of that would be that the government of Ghana would have stated its policy on DFS, which would essentially perhaps be all the payments that have to be done digitally, any incentives that are created for industry to drive DFS, all of those things which the government needs to take a stand on to really open the space. We hope, as CGAP, we hope that that would be in place to really kickstart movement.
Good, so, and we'll be able to tell if that has happened. Because
Yes.
that is an act of parliament.
Yes. No, it's not an act.
It's not an act of
yes.
parliament. Would it have to be voted on by
The
parliament?
National Financial Inclusion Strategy, I believe, is already at Parliament. But the subset DFS policy, because it's a subset, I'm not sure that it would need to be.
Okay. We thought of one yet? Okay.
I
Let's
think
go with you.
it's a relative of what Buddy said, which is that people would be using mobile money, ubiquitously for everything, not only for person-to-person transfers, which is the case now, but that people would use it routinely in stores for paying bills, for paying government, for receiving payments from employers and government and so on. So there's a further step. Mobile money is very widely used and popular, but only for the simple P2P transaction.
So
we'd
retail
see
acceptance.
retail, government transfers, payments to government, payments for bills, that the rest of the ecosystem would be enabled with mobile money the way P2P
Well,
transfers
the VP
currently
said
are.
this morning that that was actually going to be made compulsory in terms of dealings with governments. So,
Yeah, that has been very, very successful in Kenya. The government payments, 99% of them are accepted through mobile money now. So I hope
okay,
we see
well,
something
that's
similar.
concrete. We can measure that.
Mm-hmm.
Last word to you, sir.
Well, mine just follows from hers. For monetary policy transmission mechanism to be effective, we cannot overemphasize the importance of DFS and financial inclusion. And for that to be more effective, we have to be able to reduce or minimize the cash out. And that's when what she said comes in. If we're able to minimize cash out for the mobile money payments, be able to accept at the retail level, for government transactions to be able to done electronically, payments to be done electronically. It comes back to help to improve the transmission mechanism of monetary policy, and it helps to also deepen the impact of government policy. For me, next year from now, that is what I want to see.
You want to be paying your taxes with your
Everything. Make investments, buy treasury bills, do it. It's being done now, but I want it to be deepened and cut across all.
Would you make it mandatory?
Make it
will
preferential pricing.
incentivize the use of that.
A tax incentive.
You incentivize the use of that to say that if you pay electronically, there is a discount. If you use cash, you have to pay more, and that will help to push it.
Very sensible carrot and stick. Panelists, thank you very much. Ladies and gentlemen, thank you very much. Thank you for questions. Please join me in thanking these excellent panelists. They certainly went through their paces on this one, so thanks very much to them. And we hope we see you all again next year, if not sooner. Thank you.